Hello everyone, this is Simon, and in today's video I'll be talking about change in state of delivery according to ICT. If today is your first time of coming across my channel, don't forget to watch this video to the end, like, share and subscribe, and turn on the bell notification so that whenever I drop videos you'll be notified. Let's first of all head over to the PDF to see what change in state of delivery is. Okay, I want you to take a look at this diagram. What is change in state of delivery? Change in state of delivery is when price moves from bearish to bullish or move from bullish to bearish. You understand? So take a look at this diagram. You will see that here we were having a swing high here, buy side liquidity, and price was moving to the upside. Look at it, we were having higher highs, higher low, higher high, higher low, and higher high. And on getting to these old highs, look at what price did. Price came, swept, took liquidity above this high. You understand? Took liquidity above this high and broke through to the downside. Look at what happened here. When market was approaching this level, you notice that we have 1, 2 candlesticks that took liquidity. So the opening price of this series of up close candles, it can be a singular up close candle or series of up close candles. You understand? We have 1, 2 that swept liquidity before we have this aggressive move to the downside. So the opening price of these 2 up close candles becomes your change in state of delivery if price close below it. And look at it here. You draw it across. Later, price came and closed below it. So the opening price of the up close candle becomes your change in state of delivery. Look at when price came back to it, we have aggressive move to the downside. This is for a bearish scenario. Let me go to the second example. Look at the second example. We are having a buy side liquidity again. Then market was now coming up. On getting to this place, look at what happened. We have 2 up close candles here that swept liquidity. So the opening price of this movement, these 2 up close candles, the opening price becomes your change in state of delivery. You understand? Then look at what market did later. Market, we got change in state of delivery with this candle. With this candle, for change in state of delivery to be valid, first of all, the rule number one is that we have higher time frame engagement. That is, it can be old lows, old highs, can be other block, can be breaker block, can be fair value gap, but let it be a higher time frame point of interest. So let's assume now here is our old highs. You understand? Market now came. You understand? Took liquidity above the old high and gave us move to the downside. That is changing in state of delivery, changing from bullish to bearish. So this market changed to bearish. Immediately we have this candle closing below the opening price, of this up close candles, and we have moved to the downside. The reason why you need to learn how to use change in state of delivery is that if you were waiting for market structure shift, you get market structure shift at this area here. You get market structure shift here. You understand? This level, this low, that's where you get market structure shift. But if you notice what happened, market never came back to this to retest maybe this fair value gap or maybe this other block. You understand? Because many traders would have been waiting for market to come back and retested this. But if you are making use of change in state of delivery, immediately you see this closure, this 1 hour closure. This is 1 hour time frame. Immediately you see this 1 hour closure, you jump in, enter here, then put your stop loss above here. Let's see another diagram as well. Look at this one now. This one is in a bullish scenario. This is an old low, sell side liquidity, and look at what market did. market was coming down, price was coming down, and we have series of down close candles. We have 1, 2, 3, 4, and 5 that swept liquidity. So the opening price of this first bearish candle becomes our change in state of delivery, becomes our order block. So look at where we change delivery here at this candle. So you would have taken this trade after you see this, maybe taking the trade at the close of this candle, then put your stop loss below here or here. But look at what happened. Market later came back and we tested this zone to move higher. Look at another one. We have buy side liquidity here, and this is up close candle, one singular up close candle that took liquidity. So the opening price of this candle becomes our change in state of delivery. Look at where we got change in state of delivery at this candle closure. It must be a candle closure. It must not be a week. It must be a candle closure before we consider it to be change in state of delivery. You understand? So you would have entered there, put your stop loss above this candle. Okay, this is fair value gap, higher time frame fair value gap, and market came inside the fair value gap, created a liquidity zone. You understand? And later market came, swept liquidity. Then the opening price of this series of down close candles becomes your change in state of delivery, becomes your order block. So you draw it out. Look at when we got close above, we got close above with this candle, we change delivery with this particular candle. So your entry would have been here, then you put your stop loss maybe somewhere here. But look at market also, price also came back, we tested it before we moved higher. Let's check the last example. Look at what happened here. We're having some lows here, and market price swept this low. This is the opening price of these two series of down close candles. So immediately we got closure above with this candle, we changed delivery with this candle, then market retested and continue moving higher. Then let's now go to actual chart to show you some example. Okay guys, this is Solana USDT on daily time frame. I want you to see what happened here. When market was moving higher, at some point on daily time frame, we created this high. I want you to look at it carefully. We created this high, and later on, we have 1, 2, 3 candles, daily candlesticks that swept liquidity, and we got closure below. We swept liquidity, close within the range. You understand? So 1, 2, 3 becomes the opening price of this series of up close candle becomes your change in state of delivery, becomes your order block. You understand? So we got closure above below with this candle, confirming move to the downside. But I don't take trade on daily time frame. So where immediately you see it like this on daily time frame, you go down to 1 hour time frame, because 1 hour time frame aligns with daily time frame. Let's go to 1 hour time frame and see how we would have taken this opportunity. On 1 hour time frame, we have series of how many candles? 1, 2, 3, 4, 5. Series of 5 candles, 5 up close candles that swept liquidity. So here becomes our change in state of delivery. Look at where we got change in state of delivery with this 1 hour candle. So your entry will have been at the close of this candle, then put your stop loss maybe at this side, then you target the daily change in state of delivery. You understand? That this will be your first entry. This will be your first entry. Then on daily time frame, if you later on, after we must have taken our profit, look at what happened. We got break of as in we got on 1 hour time frame, we got change in state of delivery with this candle. You understand? And when market retested it, this would have been our second entry because we got candle closure on 1 hour time frame. We would have taken this trade, put our stop loss here above this high, then maybe target 1 to 3. We have some equal, we have some lows down here. Maybe this one would have been okay, this one would have been okay. You understand? Maybe but I like going for 1 to 3. You understand? I'm out of the trade. Another way you can also use confirm this change in state of delivery is by using two assets that are in correlation with each other, two assets that correlate with each other. For example, this Solana USDT is correlated with Solana BTC. So you can take advantage of two of them. I want to show you something now. Before you even, the first thing for you to do to confirm whether this particular liquidity sweep is valid, liquidity rate is valid, is for you to check the second pair, whether you are seeing any kind of disagreement. You understand? By that way, you are using divergence, SMT divergence, according to ICT. So this is Solana USDT. Let me show you Solana BTC on daily time frame. Look at Solana BTC. I want you to observe what happened here. In Solana BTC, this is the same high. And I want you to see that, I want you to agree with me that market fails to take liquidity above the high, the way it took it on Solana USDT. Are you seeing it? You understand? Let me show you. This was the change in state of delivery on daily time frame. If you see, go down to 1 hour time frame on Solana BTC, this would have been our entry. This was the up close candles that swept liquidity on Solana USDT. You understand? So we got our change in state of delivery here with this candle, this 1 hour candle, and it also created fair value gap. You understand? It also gave us fair value gap. So you would have also taken this your trade at the close of this candle, then put your stop loss above here, then target this point as well. You understand? Not only here, let me show you another one. This one now is on 1 hour time frame. This one now is on 1 hour time frame. Look at on 1 hour time frame. I want you to look at this high on Solana BTC. You notice that market swept liquidity above here and gave us change in state of delivery here at this candle. And market also came back, price also came back, retested the other block of the change in state of delivery. You understand? So here would have been our entry. But let me go to Solana USDT and show you where this divergence happened. How you would have taken advantage of SMT divergence and the change in state of delivery. This one gave us higher high. Then if you go to Solana USDT, let's check for that particular high. Look at it as well on 1 hour time frame. I want you to see what happened here. Look at it. Market failed to take liquidity above the high. Same high we saw on Solana BTC. So this would have been your change in state of delivery. It would have been here or it would have been here. Any of which is correct. You understand? If you notice, market reacted around the two of them. You understand? So you need to go to your chart and backtest this strategy, backtest this entry model and add it to your profile. It will give you an edge. It will increase your winning rate. So guys, if you find this video helpful, don't forget to like, share and subscribe and turn on the bell notification so that Anytime I drop videos, you will be notified. Thank you guys.